Hello guys, this is Daniel here, the small cap guy. So today, right, I'm going to show you another small cap company, and this company is called the Pro-Dex. Okay, so how I found this company, right? So as usual, I come to FinVix, and then the first thing I screen is the market cap. So I choose less than $2 billion, and then the fundamentals I choose the earnings per share growth, right, for the past 5 years. I choose positive, means that the earnings per share has to grow for the past 5 years, and debt to equity less than 1, and net profit margin more than 10%. And I also put in this insider ownership of over 10% for small cap company. Okay, so for this company, right, the market cap is $68 million. Okay, so more about this business. So this business, right, was founded in 1978 and listed in 1990. So this such an old business, right? The market cap is only $68 million. Okay, so it is not very normal, I think. But this is one turnaround company. So later I will explain to you what is a turnaround company. Okay. So what this company does is basically this company designs and manufactures the surgical devices used in orthopedic and maxillocranial facial markets. Okay, so basically I'm not sure what is this. So I went to Google search, and I found this. So actually it specializes in surgery of face, mouth, and jaws. Okay, so I still quite don't understand. So what I did further is I go and search for the images. Okay, so I see all the heads here, I see the skull here. So I basically knows that this business is dealing the surgical devices that is happening in the head lah. Okay. Okay, so the other thing is this company has this patented adaptive torque limiting software. So it is an algorithm that can control its shaver, control its drivers. So later I will show more about this. And the next thing is this precision air powered motors. Okay, so yeah, but the thing is majority of the revenue comes from the sale of the surgical devices, which we will go through later on. Okay, so this is what they sell. Okay, so they sell everything here, and these are their customers. So those are surgical companies, the surgeons need them. And okay, so I want you to focus on here. Okay, Pro-Dex has greater than 60% market share in CMF. Okay, so CMF is basically this thing. Okay, so this is CMF, the head. Okay, the smallest market in the orthopedic space. Okay, so this is a very niche industry, and then Pro-Dex owns more than 60% of the market share. Okay, but I want to tell this slide I've taken from the website is from 2017, so it is like 2 to 3 years old now. So I'm not sure whether this statistic is still true or not. Okay. Okay, so this is the patented software algorithm. So because I'm not from this industry, and then after I read them, I still not sure how it works but basically it says that if there's this software, right, the software inside the driver, or the or the the shavers, right. So there's this algorithm inside that which can prevent the cortical bridge wire tissue differentiation. So okay, again, I'm not in this field, so those technical details I'm not too sure about it, but I think this is one of the economic mode of this company, which is patented. Okay. Okay. Next we look at the revenue. Okay, so the revenue, right, as I said earlier, most of the revenue comes from the medical device, the sale of medical device, which accounts for 90%. Okay, and then the rest are not so significant. Okay, and then I found this thing, the largest customer risk. Okay, so I found that for the customer concentration, right, the largest customer in a company is 63% of their total revenue. Okay, last year was 56%, then this year increased to 63%. So this is a very major risk that I found in this business. So if this customer choose to leave, right, then no, this company is like more than half gone. Okay. And no, top three total is 84%. So it is a very dangerous. It is a potential risk, I would say. Okay. Okay. Next, the management. So the management, right, the CEO is called this Rick. So he is a CEO since 2015. Of course, he's not a founder because the company was founded in 1970s. Yeah, and he joined the company like since 2006. Okay, the share ownership. Okay, so the share ownership, not all directors, right? So all directors, the executives, right? They own 38.6% in the company. So it is a very good sign for a small cap company. And then for the CEO himself, right? No, he is not a founder yet. He got a 2% share in the company. So I think it is I think the company values this CEO very highly. So the company give him 2%. Yeah, usually not a founder, right? You usually won't get significant percent of shares in the company. And then the executive compensation, I think it is good. The salary paid is normal, I think. Okay. So next, we move on to financials. Okay. For financials, okay. So this is Pro-Dex financials. So you see, right? Okay. You see first thing, revenue. So revenue, right? From 2010, it actually decreases to about 2015, 2016. Then it start to increase again. Same goes for earnings per share. So in 2010, right, earnings per share was negative. So all the way negative until 2016, suddenly it goes back up. So this is what we call a turnaround company. So initially the company was losing money, and then after a while, right, something changes. So what is this change, right? 2015 and 2016, right, actually is the change of new CEO. So after this CEO came in, right, initially the company was losing money. The CEO came in, and then the CEO did something, and then the company starts to make money again. You see, 2015 the CEO came in, then 2016 start to make money. So I think the CEO is very powerful. Yeah. And next thing, what is next? Okay, so you see the gross margin. You last time was 36%, then came down, then now grow to 36% again. So I think it's a good sign. Okay. The free cash flow. Okay, previously was no negative or nothing here. Then for the past few years, 2017 onwards, it becomes healthy again, positive and consistent. Okay, next thing is net margin. Okay, net margin. Okay, so it is more than 10%. It is very good. Oh, by the way, one more thing I want to talk about is for this earnings per share, right? You see 2016 it was 20 cents, then it increases. Then in 2018, the earnings per share suddenly drops a lot. Okay, so what happened was I go and check the annual report, right? So there's this thing inside the operating expenses. There's this thing called the asset impairment changes. Okay, so in 2018 there was a 1 million write-off in this category, while in 2019 there is nothing. Okay, so what is this about? Okay, the 2018 asset impairment changes is the impairment of investment in Monogram. So I think they invested in this particular field, right? And then this Monogram lose money, so they have to take it off of 800,000, as well as impairment of goodwill and intangible asset of 200 over K. Okay, so this goodwill and intangible asset, I think previously they value it because they see the potential in this fine line, but after that maybe something happens, something not good happens, so they have to write off the goodwill and intangible asset. By the way, intangible asset itself, it is intangible, so it is kind of like nothing. Okay, so this is what happened to them last year. So after this 1 million write-off, right, then the earnings per share actually dropped. But 2019, it came back normal again. So I think it is a one-off event for this. Okay. Okay, where were we? Okay, ROE, return on equity, right? Okay, it was fine. I think it was fine. 20%. interest coverage, okay, so definitely it's good. Okay, then debt to equity, of course, less than 1, so it is a good sign. No current ratio, it is very healthy. They have a lot of current asset. Okay, okay, anything else? Yeah, okay, I think that's all for financials. So valuation, right? So valuation, of course, we are going to use growth. We're going to use growth method, right? So we look at the growth rate. So the growth rate, no, there's only this 3 years average of 69%. But I think this 69% is not a good metric. So I want to put it really conservative, right? I'm going just to put it at 20% growth. Okay, 20% growth. Okay, so what I'm going to do now is to take this value, take this latest earnings per share, right? The last year earnings per share times 20 to see what we get. Okay, so 20 times 0.97, I got like 19.4. Okay, look at the share price now. Share price now is 17.55. Okay, so it is currently undervalued. Okay, so one more thing to take note. So remember I said it was a turnaround company, right? So 2010 until 2015, right? It was like losing money. So you see the stock price back then, 2011 to 2015, it was like trading like $2 plus. Then after the CEO came in 2016, it starts to make money. Okay, it starts to make money. What happened to the stock price? From 2016 onwards until now, from $2.31, it goes up to uh 17 plus dollars. It is like almost like more than eight bigger in 4 years. Okay, so it is very powerful. So you see, this is one type of very typical turnaround company where the company initially lose money, right? Then the management came in and do something, then the company becomes profitable again. Okay, so I think it will still continue to grow, and and the fair value, I think it would be around $19 plus. Okay, yeah, so that's all about this company. So if you like my analysis, right, remember, please go and like my video and also subscribe to my channel. Okay, okay, see you guys next time. Okay, goodbye.